If you're a doctor paying over $200,000 a year in taxes, likelihood is you're overpaying on taxes. In this video, I'm going to show you how to save 50% a year on your taxes this year. Let's go. All right, let's get into it. The agenda is I'm going to show you 250K is disappearing every single year from your bill on your taxes. We're going to cut it in half by 50% by using structures over loopholes, right? Remember that, structures over loopholes. Introduction, I'm KC Chauhan, founder of togethercfo, and I've helped over 300 doctors save over $50 million on their taxes. I'm a writer for Forbes magazine, and I'm going to tell you what your CPA won't. Let's get into it. Okay, so the CPAs, they're reactive, right? They're going to think about everything from the past, what they can do, use loopholes, which is great for smaller businesses because they're looking at it more in a general way. What we are is tax strategists, right? We're very surgical, so think of it as a general doctor versus a specialist, right? A brain surgeon versus your general doctor. If you have an ailment and you need surgery, you're going to go to the surgeon, not to the general doctor. If you've got a headache or something small, go see your general doctor. Know a little bit about everything, not a lot about one thing. We know a lot about structures, and using structures, we can save you comfortably 50 or 60% a year on your tax bill, all completely legally. We're going to show you how in a second, compared to loopholes that are not going to move the needle all that much, right? The loopholes can save you maybe 5 to 10%, which is temporary, and it changes year on year. Like, for instance, when the big beautiful bill came in, there's been a change in the amount you can take on your home deductions from 10,000 up to 40,000. That's great. That's 30,000 more than it was. But if you're a multi-7, multi-8-figure business owner, that's not enough. You need to be able to save hundreds of thousands of dollars, not ones and twos. So we're going to show you how to do that using structures where you can get anywhere from a 30 up to a 60% tax reduction every single year. And again, loopholes close, but structures last. So they definitely stay around a lot longer than the traditional loopholes. So in this example, if you'd lost $500,000 a year in overpayments to the IRS or for donations, over a 10-year period, that'd be $5 million gone. Now think about that. That is a lot of money. If you have to make that in your business, how much revenue do you have to make in order to get $10 or $5 million tax-free at the end of it? It's a lot, right? So, and even more if you compound it. So if you put that money that you've been overpaying to one side in an account, and let's just say it's growing, how much would it have compounded over that 10-year period? Likelihood is we're now talking tens of millions of dollars, not just hundreds of thousands. So everything we do is kind of in a methodology of the Rockefeller principles, right? Where you own nothing, control everything. That's kind of the key fundamental principle that goes against what most people have been taught all their lives. So think about that. You graduate college, you get a good job, you start making some money, you got your own surgery centers now, and it's, I want to own it, or I've just been told, hey, I've just got to own it, it's got to be my name or my LLC or whatever. But that is leading you to high taxation. What if there was another way? What if you could not own it all, but you could control it all? Think about this. Let's just use jets as an example. All these billionaires and mega millionaires that have yachts and jets, those assets are not in their name directly. But if they want to go somewhere on the jet, it's fueled up, ready to roll with the pilot and crew ready because they fully control it. So that shows you there's a huge difference between ownership and control if you're structured correctly. Now we're going to show you how to do that, but just really need to get comfortable with the fact that if you have control, then you have the power. And really that's all it's about. It's maintaining that power. What is the IRS's statement on this? So they want you to pay your fair share. And we know with certainty from leaked tax returns from these billionaires that they are paying 1% or less. Is that fair, right? It's fair for them because they know how to use the 80,000 pages of tax code for their advantage because they have better structures than you. So we're going to show you what structures they use. And again, loopholes are temporary. They come, they go, they change. The rules change all the time, whereas structures are permanent, right? So when we're looking at structures, these have been around hundreds of years, not likely to change. So if your CPA's ever said to you, hey, there's nothing more we can do on your taxes, we've done everything we can, then that's a load of BS, because you just need to get a better team around you. Because you could ask them, well, what are the wealthy doing to save so much on their taxes and pay a 1% tax rate versus me, who's likely paying 35-40% tax rate depending on where you are, right? And again, this doesn't apply to everyone. We are only talking to multi-7, multi-8 figure business owners. So if you're not making more than $2 million a year in your business, you don't need this. You can use enough loopholes to get you down to a significant level. This really is for business owners that are doing anywhere from $2 million a year up to $50 million a year, or that they're paying over $200,000 a year in taxes every single year, and they have to be a business owner. It can work for W-2s, but primarily this is for business owners, or if you're selling an asset, right? So there's huge benefits to this structure as well. If you've got stocks, real estate, or anything that you're selling, that's going to create a big capital gains. What disqualifies you is if you're allergic to paperwork. You've got to be able to work with us. We can do most of the heavy lifting, but you've got to get your side of it done. Again, you've got to be not mixing personal and business expenses. We see this all the time with clients. We've got to make sure we keep away from that. And again, if you're looking for that magic bullet that's going to get you down to 0% taxes, keep looking. Doesn't exist. This is going to save you 50 to 60% conservatively every single year. Most people are more than happy about that, because then they can make that transition from being rich to becoming wealthy, where your money is working for you and making you more money, right? That's really what we're talking about here, longevity. So the strategic giving partnership, what is it? Let's get into the details. It is a limited partnership, right? What does that mean? It means it's an entity with at least 2 owners. One owner is called one person is called a general partner. They're the person that's in power, in control, doing the day-to-day operations. And then there's another partner called the limited partner, and that is a silent partner doing nothing, just sitting on by, waiting for a check if one ever appears. So you would be the general partner, but you would be a 1% owner. So you fully control it, and your taxes would stay low. Whereas your other partner, a charity, as an example, could be a 99% owner and also be the limited partner. So again, we're differentiating between ownership and control at the general level, general partner, limited partner. And then the second level is the ownership percentages, where you own 1% and therefore are taxed on 1%, and a charity can own up to 99%. Okay, and then let's just give you an example of how the profits can flow. So in this example, the net profit is $2 million. So after you've run through all your deductions, put all your marketing and your expenses through there, we all know what that means. And then normal tax bill in this scenario, if we use 35%, would be $700,000, right? That's crazy. It's a lot of tax to be paying. So we don't want that. With the strategic giving partnership, we could get you down as low as $7,000. That's significantly less, right? That's a $693,000 saving. Imagine how much revenue you have to make top line to be able to bring in profit after tax of $693,000. I'm guessing that's millions. That's probably $2 to $3 million of revenue you'd have to add in your business, depending on your margin and your tax rate. But significant multi-7 figures to be making $693 after tax. That's what we can show you how to do. And again, control versus ownership. I keep saying this. I want to hammer it home. You are in complete control of the structure. You receive a K1 for 1%. A charity would receive a K1 for 99%. They are a silent partner. And again, the way these documents are written, you do not have to issue a distribution. It's up to the general partner when distributions are issued. If there's enough cash in there and you want to keep going, you can reinvest in, grow it, or distribute it. It's totally up to the general partner. Let's give you an example. Dr. Andrews, orthopedic surgeon, we saved him over $250,000 in his tax bill alone. He then reinvested that money in stocks and real estate, made a fortune. But he was also able to put enough down to buy another location. So not only is this a great strategy for wealth accumulation and wealth growth through stocks, real estate, crypto, whatever you like to invest in, but you can also invest in yourself. You can then get to that next practice quicker and grow that legacy longer, right? So it's really important to know that your options are not limited with this structure. You can keep moving and growing the way that you like, right? Is this legal? Yes, it is 100% legal, backed by hundreds of years of tax code. It hasn't changed, like loopholes. We've got over 300 clients with 0 audits, touch wood. And then we also have an independent legal opinion letter that we've had a third-party tax legal firm review our structure, what we do, how it works, the intent, the purpose, all of that, and they were happy to sign off on that. So why hasn't your CPA told you about this? Because the CPA doesn't really work for you. They work for the government. Their license is from the government, right? They want to make sure that you're compliant. And let's use a simple example. If your CPA was able to save you, let's say, $1 million on your taxes, would he get paid any more for doing it? No, of course he wouldn't, right? So he's getting paid the same amount of money regardless of how much or how little he's saving you on taxes. So how does he get paid? He gets paid by having more clients and charging more, right? Per return usually. So his incentive is to have more clients and more returns. It's not to save each one of his clients more and more money, because he's not getting paid for that. Now, if you've got a sales team, you should understand that they will do everything they are incentivized to do and then nothing else, because they want to get paid. CPA is no different, right? They're not trained in these advanced charitable structures like we are. We're tax specialists. That's all we do day in, day out. Just like a brain surgeon is only performing brain surgery every single day. Whereas the general doctor is seeing patients for all sorts of ailments on a general basis, like a general CPA. We are a specialist firm, not a general firm, right? And you definitely need a specialist if you are paying 200K plus or have a multi 7-8 figure business. What happens next? We can show you how all the mechanics and all the details work. Get on a free call with our team. You can scan the QR code at any time. We're going to show you exactly how much you're overpaying. More importantly, how to stop the bleeding. There's no point learning how to stop the bleeding and not stopping it. We're going to show you everything you need to do that. All you got to do is scan that QR code, shoot us a text or a call or an email, whatever you prefer. Take a picture, send it to your assistant, tell them to schedule it for you, right? We can help you save a significant amount of money for you and your family and your future family. So we look forward to helping you with that. I'm Casey Chohan. Catch you on the next one.